Hey traders, checking in on the stock market today. A little bit of strength in futures opened last night into some weakness today. And in the end, we've got tightening ranges and some clear clarity on the charts that's going to dictate the rest of the week when it breaks likely tomorrow. Let's look at what these ranges are. Before we get to the charts, we've got another free ebook this week, and this one is about how to establish a risk-free trade, a game plan for scaling out. This guy's excited. How to stay in control, how to split up your trade exits with the simple analogy, the video that I went over that describes this as well, and the mindset to adopt this trading method. Link in the description and the comments of this video. It's free. Check it out. S&P 500, 4-hour futures chart. So that is the chart, along with the Nasdaq, which is very similar. But we are looking at a range from the last 3 days, Thursday, Friday, and today. So Thursday, big bull move. Break resistance. Actually, the S&P 500 rejected from resistance. This is the Monday, Memorial Day high, which we rejected from. Big drop Friday, but held the low of Thursday. Bounce overnight when futures open, but failing to break the high of Thursday. Into a pullback today that held support. So here we are with a tightening range. And this tightening range is going to break probably tomorrow. Doesn't have to, but we know within the next 2 days it's going to break. And we have to ensure that if it breaks to the upside, we have to take out 1, 2, 3 levels. If it breaks bearish, we have to take out 1, 2 levels in terms of having conviction and follow through. So that is the chart. And it's two very different scenarios, because if it's a bear break, our weekly lower high is set and we start weekly consolidation. And if it is a bull break, we're going to be right back at the high of the bounce in continued short-term bull strength. So that's all that I'm watching over the next day or two. The Nasdaq is similar. Also keeping an eye that it could be a broadening wedge type pattern. The difference here is we got a higher high on Thursday compared to the Monday holiday high, which is why it's a bull break with a lack of follow through and some bear breaks with a lack of follow through, which is why I'm keeping an eye out for the possibility that this is a broadening wedge. I've been talking recently a lot where I say I care more about the Nasdaq than the S&P 500. With this pattern, I care more about the S&P 500 because we're closer to seeing a bear break on the Nasdaq, but it's possible that the Nasdaq breaks bear, sees a lack of follow through if the S&P 500 doesn't follow. So the Nasdaq breaking bear would definitely be something we pay attention to and would give us information, but we won't follow through unless the S&P 500 then breaks shortly afterwards. So I started the day today trading poorly, and I salvaged my day with one pattern. And the premise of the pattern was looking for a lower high on this chart, and that helped a lot. So I'll go over my trades. The poor trades was a bounce attempt on the biotech sector. I had a good entry on an S&P 500 short on the morning that I then stopped out at break even. So ate the loss on the biotech sector trade. I'll talk about that when we get to the biotech sector. But then the Nasdaq, QQQ gave us this rising wedge. And as I was closing up the live stream, I said, I'm going to top fish the high of the day here for the potential that this is a rising wedge. And we putted around, we got real tight. We knew a break and volatility was coming. And again, that's a powerful thing. So when I see a tightening range, I'm able to say volatility is coming. And you might look at that and say, well, yeah, no, who cares? If you're not saying up or down, great. So it could break bull or bear. Where's the information? But it gives us information. I'm looking at the post right now to just pull it up. Because it tells us we want a position for the break of this volatility. If we are not going to see volatility, then risk and reward, whether or not the trade is worthwhile, remains in question. But we know 11:03 a.m. and here we are at pretty much right here. And so the range that I was watching, I was keeping an eye on this rising wedge type pattern, and I was just watching the sideways range as well, where we were trading sideways for an hour. So volatility incoming, many names tightening for an hour on the 5-minute time frame. The burden is on bears in the short term on QQQ to prove 5-minute downtrends if we're going to see a shift. And so I was top fishing and trading SQQQ, anticipating the potential that we were going to set that longer term lower high in the futures equilibrium. The other factor was the V-shaped bounce on the Nasdaq, and we never confirmed the 5-minute uptrend. We never set a 5-minute higher low and higher high. So I didn't trust that V-shaped bounce nearly enough. So we then confirmed a 5-minute downtrend, and the volatility poured in on volume, and that saved the day. So I ended up with a green daymaker plus after starting the week, and I never like to start the week with a solid red trade, and it was a solid red failed bounce attempt in the biotech sector. But this was a very solid green trade. I exited the trade after scaling out, which is in line with the ebook. And then I re-entered on the 15-minute bear flag. Signal for re-entering on the 15-minute bear flag was when the 2-minute uptrend was lost. We had a little 2-minute tightening range, break bear, re-entered, and then scaled out again. And I did a good job of exiting before the solid bounce took place based on the 1-minute time frame. I was looking for a 15-minute higher low, and as soon as we changed the 1-minute trend here, exited all of my shorts, skipped that whole move in terms of giving back profit. So that salvaged my day, just one pattern, all based on the bigger picture premise of scouting the lower high and then seeing the smaller clues zooming in. A bearish pattern with a rising wedge, a lack of a 5-minute trend change, a tightening range telling us volatility is coming. And in the end, the Nasdaq futures chart, again, same deal, tightening up on the 4-hour time frame. And the question is, can we hold support and bounce overnight and give us a nice clear tight range for tomorrow during regular trading hours? Burdens on bulls now in the short term because we're closer to a support break than a resistance break. Semiconductors, sideways, gap up open for the inside bar, and a lack of follow through. And I very often talk about how inside bars, I do not like the breaks taking place on gaps. They have to take place during regular trading hours for me to trust it. And that's a little bit of a lesson in the biotech sector that we're going to look at in just a moment. The benchmark level, as we know, is the higher low of 237.61. If that level is maintained, the bulls keep their control. We came close to the high of this move, 249.12, but failed to break it. And that's it. Those are the two levels I care about. If the futures charts break bear, we're going to test support. And if they break bull, we're going to test resistance. And we've been trading within these two levels with this range for the last 6 trading days. Same deal. The longer we trade sideways and tight, the more we know volatility is coming. And on that note, USMJ, MSOS, part of growth names, very weak overall. Falling knife for months and months. Look how tight we're getting. We know volatility is coming. It can be a bear break, but sideways for weeks and decent volume as we're trading sideways. Break is imminent there. Tesla, bearish news on Friday, closed at the low. We can see pre-market. I'm getting a lot of information pre-market where I will look at the ETF. In this instance, it was QQQ. I see QQQ is either gapping up or right at the high of Friday. And I look at other individual names and say, okay, Tesla's still 2% away from its high. That has served me well multiple times. I did the exact same thing, whatever day that was, Wednesday, where I was able to say QQQ is testing its high of Tuesday. I'm going off my memory here, so I think this is when it took place. Pre-market, I was able to say QQQ is testing the high of Tuesday right now. Tesla is still 2.5 or 3% away from the high of yesterday, which means even if we start the morning bullish in markets, we can go up multiple percent and still not be breaking resistance, which is what a bear wants to see on a top fishing play. Tesla did it again today. QQQ was at the high of Friday, pre-market. Tesla was 2% from its high of Friday. And we topped out right after the bell rang, setting a lower high by about 1% from high of Friday resistance, and bears controlled the morning from there. It's what a top fishing bear wants to see. Cushion to work with. Well, even if we start with a little bit of green on the morning, we can still reject from resistance. So Tesla held a little base at 700, daily inside bar today. Could this be an inverse head and shoulders? Yes, it's possible, but certainly not possible without a notable news catalyst for Tesla itself, or in the absence of that, has to be the futures charts breaking those tightening ranges bullish. Can't confirm a daily trend change without that happening. But relative weakness on Tesla the last 2 days definitely stands out. Financial sector, daily inside bars broke bull. Solid first half of the day, but we closed at the low of the day. If we fail the high of the bounce 35.74 and break our daily higher low of 34.57, if we fail this daily bull flag, our weekly lower high is set. So it's another name with a tightening range where we're going to get an answer to that question within the next few days, whether or not the weekly top of the bounce is set. At this point, I call this a failed daily bull flag. It's not game over. There's still a chance to recover it. But again, this is your ideal close for a bear and your least ideal close for a bull after breaking 2 daily inside bars bullish to start the day. Space for an hourly lower high. Actually, we already set one. Hourly lower high, 35.23. Healthcare, lower high everyday pattern for the last 5 days. We failed the high of yesterday by 1 penny, the high of Friday. The weekly is still possibly shaping up a confirmed weekly downtrend. If our futures charts break bear, the healthcare sector is likely going to be down, testing 128.17 and watching that 125.28 key level. Bull's not doing anything over the last few days. IWM standing out stronger, but the bull breaks lacking follow through have it as a potential rising wedge. Again, if the futures charts break bear, this is going to be a rising wedge. Has to see the futures charts break bull to negate this from being a rising wedge. If this 4-hour rising wedge confirms, a weekly lower high is set, right off EMA 12 resistance. So we can look at IWM and say it's one of the stronger sectors over the last 2 weeks. Gap up open, it's holding on, but we put on our bear glasses and we're just cautious, knowing that that rising wedge will break bear if our futures charts break their tightening ranges bearish. Biotech sector. So here's the example where we have a triple top of 71.57 resistance. We have a bullish correlation Friday due to buyout news that helped the entire sector see some relative strength. And we open higher, and then it's nothing but bears the entirety of the day. Very disappointing day for the bulls. And so the reminder for me is the break of resistance on the gap up open is much less trustworthy than if it happened during regular trading hours. And so I played a bounce. It's not like I bought the gap up open. I waited for weakness, and the 5-minute RSI was in the teens, which is why I was interested, because we were still in an hourly uptrend at that point. So I forget exactly where my scale-ins were, but I know I made 2 of them. And it was very clear at a certain point that we had a bearish correlation. And how I recognized the bearish correlation was obviously the big drop right out of the gate. But we had a little short-term bounce. Maybe it was even on the 1-minute time frame in the Nasdaq. And while that was happening, on the 15-second time frame, I was just watching significant market selling into the bid. Maybe we can see it on the 1-minute chart here. Probably not. But it was just notable selling into the bid. And what also then stood out to me was a hidden resistance level. What is a hidden resistance level? You can put shares on the bid or the ask and not show. Some people call them iceberg orders. You see the tip of the iceberg. You don't see what's under the water. And in this instance, you recognize it by it showing, let's say it shows 1,000 shares at 71, and you see 1,000, 3,000, 5,000, 7,000 volume hitting 71, and that order is not moving. So you know there's more there than is being shown. And there are ways that you can, when you're placing an order, depending on the broker, you can check a box that hides the order size. But we rejected from 71. And then this right here, I recognized we've got hidden shares at 71 because there was enough volume that should have taken that out, and we didn't. It might have been the first test, but either way, we tested it twice and rejected twice, which then gave bears, look at this one right here, another triple top. If you're looking at the 1 minute time frame, reject, 60 seconds go by, we're rejecting, 60 seconds go by, we're rejecting. Very convincing rejections. That's 5 1 minute candles topping at 71. So very clearly, bears were defending that level, and we then rolled over for another 1% to the downside. Look at it again. Another rejection from 71. And so that was, we were able to say, top fish 71 as long as it keeps working. Trying to find. So what time was this? Key resistance test. I blocked it out by accident. Top fish galore at this level until it breaks. Bears will keep doing it until it breaks, and it never broke. So we rolled over, multiple percent to the downside, leveraged ETF, gets multiple percent to the downside. Anyways, my bounce attempt scaled into a couple positions. As soon as I enter my second position, I have to stick a stop level. I did not want to stop out at all with the 5 minute RSI in the teens, but I did. And I'm glad I did because we kept dropping after cooling them off weak little bear flag bounces. So I started the week with a solid red loss. It was probably 80% of a day loser, maybe even just under a day loser. And then again, that Nasdaq bear trade bailed me out from I never like to start the week with multiple red trades in a row because it's just starting wrong. It's just not the foot you want to start the week on. But 5 minute EMA 12 resistances, just full bear control from there. And so now on the daily time frame, yes, anything above 66.34 is a daily high or low, but we're still range bound. Today was a big win for the bears, and it is still a weekly bear flag. Probabilities for the weekly bear flag will increase if the broader market futures charts break bear. If the broader market futures charts break bull, bulls are going to have another chance at that triple top 71.57 resistance. Chinese names, Baba. Keeping an eye out, bigger picture for an Adam and Eve rounded bottom here, where you V-shape bounce into a lower high, and then you round it out, holding that low. And of course, we have to break 124.11 for a convincing, significant shift in momentum here. But we're currently over weekly EMA 12. We have to wait for how this candle closes. But we're over weekly EMA 12 right now. I mean, we've been over it plenty of times. We haven't closed over it. It'll be notable to me if we close over weekly EMA 12 for the first time in 7 months. So bulls are attempting, let's look at the 2 weeks, smooth it out a bit. Bulls are attempting this shift. We know we've been weak for a very, very, very long time looking at this monthly chart. But keeping an eye on the bigger picture. Baidu, a much more significant bounce. Key resistance test though, 158s. If we reject, we have a nice hourly, or I should say a nice weekly tightening range to be watching. But not falling asleep on these Chinese names that are trying to put in a longer term bottom. Dollar, bull break today. That was a red flag for the bulls. 4-hour equilibrium broke bull. Only hope for the broader market bulls would be a 12-hour lower high compared to 102.73. Break 102.73, and our weekly higher low is set on the dollar, which again is not a good sign for stock, crypto, metal bulls. And with that green day today, gold rejecting from a double top. We did break resistance, but a resistance break with zero follow through. Silver had a much stronger day than gold, but it's a potential rising wedge. We got right up to resistance. We rejected multiple tops in the 2240s. Still a 4-hour uptrend, but I'm going to be watching this 4-hour potential rising wedge over the next few days. So we can say silver is stronger than gold, absolutely. But if the dollar sets the weekly high or low and keeps strength on the longer term time frames, then we're going to look for a bear break of this pattern. we have to see the dollar lose the weekly EMA 12 and change the character of this longer term chart for the first time in 5 months. If we don't lose weekly EMA 12, bulls keep complete control. Oil, stronger open, 4-hour uptrend still intact. Trying to set that 4-hour higher low. And for me, it's all about the daily higher lows. And we got a lot of space here. Anything above 111.20, so we can pull back 7% and still be in a daily uptrend. I care most about the daily higher lows on oil. And again, I am looking bearish on oil. I'm not trying every day, but it's too one-sided. If I have learned anything in my experience as a trader, it is when this many people are all looking in the same direction on an asset, you look in the other direction. In all euphoria markets, yes, there are bigger picture fundamentals at play. Yes, it could grind on a bit longer than I think it can, absolutely. But I know the direction I'm looking, and I'm just keeping an eye on it. And watching for any signs that a top is being set. And right now there aren't any. Natural gas, testing the high. Nice recovery from the bulls. I'm just viewing this as a pullback into a daily higher low. Lower high, tightening range, broke bull. And now we're testing that 933 top, which is a double top, but tons of space for a 4-hour higher low to form next consolidation. So our energy commodities are staying strong. Energy sector, sideways, but still right up there at the all-time high. Space for the daily higher low. So no red flags for bulls at this point on these energy commodities. And we're keeping an eye on it. A lot of people feel that let's try that again. A lot of people feel that an oil top may help mark a stock market bottom just with an inflation narrative. You know, people think that the market may turn bullish if inflation starts coming down, and you know, at the gas pump and this oil chart certainly having a lot to do with inflation. So keeping an eye on that aspect as well. All right. Hope you had a good weekend. That's where we stand. Don't forget to do good things. Watch those futures charts. Baby turkeys. This is now the offering rock. I'll put out some old leftovers. The raccoons get it at night. Some birdseed in the morning. This is a mama cardinal right out the window here. Was sitting on the egg for a long time. I found her when it was downpouring and all these branches moved to the side and she was just soaked. But now there's a baby blob bird under her. And we'll watch it grow.